Hello, I'm live. I'm early, but I want to come in early, make sure everything works here. So, today the topic is going to be on entrepreneurship and retirement accounts. As a CPA, I work with a lot of small business owners, and sometimes I find that a lot of people do not take advantage of this tax advantage. Most of them will go years and years when they start their businesses before they encounter someone like myself who would bring it to their attention that all those years you could have been putting away 20% or 25% of your profit into a retirement account for yourself and for your employees. So I want to take this advantage to kind of share some light on it for most of you. So even if you are a sole proprietor, like there are different types of entity types, like how you register your business. I'm going to take a minute to go over the different ones. I've done a video on that before, but I just want to do a quick recap. We have a sole proprietor that you don't have to register, or maybe with the state, the local. Maybe you do a DBA, like doing business as. Or you have a partnership, which is just agreement between two people. It's not registered with the state. Maybe just a DBA and get a permit, business permit, and then you're operating. Even under those circumstances, you can still set up a simplified employment plan, employee pension plan. For short, we call it SEP, SEP. So with that, even if you're a sole proprietor, you are allowed to put up to 20% of your profit. So for example, if you have 100,000 in revenue, you have expenses of about 50,000. So that leaves you a profit of 50,000. All right. You are allowed to put up to 20%. So let's see. I don't do math in my head, but I think I'll try this time. It's about, you can put about $10,000 in a SEP account. What that means is that you are going to be taxed only on the 40,000 and not the 50,000. Similar to when you work for somebody and they have a 401k, they usually take the 401k amount before you pay taxes on it. It's the same way for when you are self-employed. It's just to make it all an even playing field. The only advantage a self-employed individual may have is that there's a bigger maximum that you can put away depending on your profit. Again, I'm not going to go too much into that because I want you all to contact a CPA in your local area or state, because I have a broader audience for this. And so work with somebody, either your CPA or your financial advisor. They can go through it, take your numbers, and then really work up something that work for you. My task I want to do here is to shed the light on that there are advantages out there for you, that you need to be talking to somebody. And don't worry about the fee you pay them, not because I'm a CPA, but that fee that you pay to that person, it pales in comparison to the tax savings for year over year. I had somebody, I did a 90-minute assessment for, and that my 90-minute assessment is like $297. With that, he is now able to put away about, because he didn't know about it, so he's able to put away about 20,000 just for 1 year. All right. So even if his tax bracket is like 10%, I mean, he's going to save like several thousands for just one advice that I gave him. And whatever he paid me is tax deductible. So always invest your money in that, getting the right getting the right tax advice, and then taking full advantage of the tax benefit that you are allowed to. Then it comes to, if you say you do payroll for yourself. So if you're on wages, again, the percentage is similar, it's 20 to 25%. It's a complicated calculation. So you need to get somebody to help you. So you can either do one for yourself. If you're by yourself and you have no employee, you still can do this. However, if you have employees, you have to cover your employees. You cannot just do the SEP just for yourself and cut out the employees. There are limitations that they have to be with you for a certain number of years and they have to be making a certain amount of money. All again, you have to talk to somebody who specializes in that in your area, in your state, or your area, to make sure that they advise you properly. I'm in the United States, and those of you in Australia, Canada, and the UK, I am fully sure they have similar tax structures there for you. Today is mostly about all taxes and is all USA for today, because I'm not certified in other states, other countries to advise tax on that. I can give you all tax accounting stuff. Accounting is based similar everywhere. You just have to gather the information. The other thing is that for you to be able to take a good advantage of all this, you need to be tracking your records, because if you don't know how much money you have and how much profit you have, you wouldn't know that you are profitable, right? So I'm just going to jump real quick to over here. Just 1 second. So I'm just going to jump right here in here. Let's see. So let's see. Go here. So I'm just going to jump into QuickBooks here. My face will disappear, but I think you can still see me. So if you have QuickBooks, my advice is please connect all the bank accounts. All right. It's very, very important to keep your books up to date. So connect your bank accounts, set aside a schedule, do all your accounting on a regular basis, preferably weekly. Then when it comes to time, say once a month, I'm going to suggest you do this once a month, because if you invest regularly, you get something called dollar cost averaging. What that does is that when you invest today, if say the shares were like $5 and you have $100, you can buy 20 shares, right? So the next month when you do your books again, and then the shares has dropped to say 250, that's dramatic, but to 250, you get to buy more shares for the next month. So if you keep up with your books every month, you know the profit. You can pull profit by month. You just go here, you go to reports. The internet is a bit slow today, so my apologies. So you can pull your profit and loss over here. Okay, so when you go up on QuickBooks over here, let's see, over here, you can just tell it you want, say, last or this month. This will be truncated, but so over here, it's a little bit slow. Oh, I guess not. Okay. So anyway, this is a sample file. But if you pull, you can just give this to your financial advisor or your accountant. But make sure you're not going to go back and make changes to it. You give it to them. They will be able to go in their system and then calculate how much they think, like estimate how much they think that you can put away in an investment account. And so this way you buying shares on a regular basis. if you keep doing this with compound interest, that's another term. Compound interest meaning that if you say you put away $100 and next month it has grown to $110, right, with interest. What happens is that then the interest for the following month is calculated on 110 instead of the original $100. And then the following month, let's just say it's 120. The interest will be calculated on with a 120. So what they mean by compound, it means that interest is going on top of interest. And so if you are investing regularly, that's how you get to take advantage of compound interest. So that's another term for you all to understand. So I want you to please keep up with your books. Stay in touch with your accountant or your investment advisor or financial advisor. Invest regularly. Some people do self-directed IRA, which is like individual retirement accounts. Unless you're sophisticated enough to understand it, I personally would not even do it for myself. I just give it to the financial institutions to do that, because there's so much involved in self-directed that I'm not even going to go there. So you probably will hear people talking about that, meaning you can set it up yourself and then you can take money from it to do investments and stuff. I don't want to mess with the IRS when it comes to rules. So I say hand it over to someone who really, really know what they're doing. And then you can focus on your business and grow your business that way. For the SEP, there's also different kinds. You probably will hear the word 401k, owner K. It's pretty much the same thing, except some of the rules may be a little bit different. So again, contact somebody, but the bottom line that I'm really, really trying to bring home to you is, as a self-employed individual, whether you have you are a sole proprietor, or you are in a partnership, or you have an S corporation, or you have a C corporation or LLC, whatever the form that you have, you are still entitled to do a retirement account for yourself. It gets a little bit tricky when it comes to corporations. So for S corps, most of the time you have to put yourself on payroll. And if you're an S corp, if you put yourself on payroll, it's a percentage of your wages that you are taking that you can put away. And the corporation can match you. So all that, again, is a complex calculation. So you need to consult with somebody to help you. C corporation is similar. You have to take payroll and then set up the 401k or the self-employment, depending on whichever one is appropriate for you, because everybody's situation is different. So I cannot tell you which one to go with. All I want to let you know is to alert you to that tax benefit is available to you, because there are so many tax benefits that people don't take advantage of. So today is the retirement. The other day I covered health insurance. I'm just going to touch on it a little bit. I've seen a lot of self-employed individuals go without health insurance because they didn't know that they could write that off through their business. Yes, you can do that. You can set it up, and you can also offer it to your employees. You can require them to pay a little bit of it, and then you can pay some of it. You want healthy employees, and you want peace of mind for them. So even if it means you have to set up their retirement account and give some to your employees, it's okay, because when you look out for your employees, they work harder to take care of your customers. So I'm all about taking care of your employees so they can take care of your clients. Can you imagine an employee worrying about their retirement? So maybe you might even they might leave you so that they can go to a place where they can get retirement and health insurance. So these two deductions is something that you want to hold on to your employees, treat them right, and then they will help you grow your business to fulfill all your dreams that you're trying to achieve. All right. And so I'm not going to stay too long today. I'm just going to wait a few minutes to see if I can get some questions here so I can answer for you. And if I don't have too many questions, it doesn't look like anyone has questions. So bottom line is, I just want to recap. Set up your self-employment retirement account today, if you can. I'm going to recommend that you have to set it up before December 31st. That's the key. You still have up to when you file your tax return to fund it. So that depends on which structure you will have, whether you're a partnership, your S Corp or C Corp. Again, consult with someone. So, but you have to set it up before December 31st. So most of them, you just have to set it up with just $25. It doesn't have to be a big amount. If you're going to go the full blast of a 401k, that has more administrative fees with it when you have lots of employees and things like that. So for a simple SEP, that's straightforward. You just go to your bank or go to TD Ameritrade or Fidelity, or any of those institutions can set up the SEP for you very quickly. The 401k is a little bit more complicated. There's also something called profit sharing. That one, you usually wait at the end of the year, then you split the profit amongst the employees. Again, that is also complicated. You need to consult with someone. So bottom line is, I want you to make sure that you have a retirement account so that when you retire, you have something to look forward to in addition to the Social Security, because the Social Security check is so small that if you don't put away money on your own and possibly even manage it yourself, meaning that you put it with the Fidelity and all those people, but you get to choose how it is invested. You know, that's where you are in full control more than a 401k, because 401k, they choose whatever stocks they want for you. But when you are self-employed and you have it with the Fidelity and all those places, you have more control. Just like your business, you have more control over what happens to your money. All right. So I'm just going to pretty much wrap it up. I wanted to make it short but interesting, because I know numbers tend to be boring for most of you. But again, if you're in the US, you're welcome to go to irs.gov. I just pulled it up here just to show you how easy it is. You can go there, you put in here, say SEP. It's just simple, and just click and then search. And you can read about it before you go and see someone. So when they are talking, you can understand. So right here, it's a Simplified Employee Pension Plan, SCP. And then it gives you all the details that you need to know. You can actually go here. There's frequently asked question about establishing it right here. And again, I'm available if you want to brainstorm some stuff. I'm more than happy to go over it so that I can suggest something that's specific to your type of entity, you know. So it tells you how you go about all these here. So take your time, read it before you go and talk to somebody. So when they're talking, you are very much aware of what they're talking about. So again, you can go to irs.gov. In here, put SCP, Self-Employment Simplified Employee Plan. over here and then go through and read it. Everything is up online now, so you don't have to go for somebody to confuse you and then you sit there and you don't really know what they're talking about. So educate yourself, because this platform I have, my platform is to empower you. I want you to be more knowledgeable about your business. Like, know your numbers. By knowing your numbers, it gives you more power about your business, and it gives you confidence. So always arm yourself with knowledge. Take the time, read about it before you go talk to them. All right. And again, I encourage you to get an accounting software if you haven't already. I do have a link in here for a preview of what the QuickBooks looks like and how it all works. I do offer training on julianakennedykcpa.com. I have a recorded training there. If you're interested, you can learn on your own time. Or if you prefer live training with me one-on-one, I'm available to do that also. All you have to do is to send me a message that you want to do that, and we can set something up. I also offer free 20 minutes, no obligation whatsoever, complimentary session. You can chat with me. We can decide how I can help you. And if you don't want to go with me, that's fine. As long as you get somebody to help you with your numbers, I'll be a happy camper. All right. So it's about 22 minutes. I still don't see any questions. So again, I want to empower you. I want you to go set up your retirement account today. If you can, take advantage of dollar cost averaging, meaning you buy regularly, and so your shares will be increased, and then you be able to build a better retirement life. All right. So that will be all for now, and I wish you all the best. Please PM me if your issue is private, because I know accounting is private issue. That's why I open myself up for PMs so that I can address your issue for you. Many, many blessings. God bless you. Love you all. Mwah.